Welcome to this video, which is about 5 well-known trading adages. Hello, I'm Peter Martin with Trading 212, and I thought it might be a bit of fun to run through what I think are 5 of the best known trading adages. Market aphorisms, the kind of sayings that I used to hear bandied around a lot when I worked on a trading desk, and to run through what the meaning behind them are and whether I think there's any value in them. So let's start with number 5, which is no one ever went broke taking a profit. I'm not really a fan of this one because it encourages you to just snatch at profits and say that there's nothing wrong with ever taking a profit no matter how small. Of course, it doesn't really stand up to reason, because if you are continually just taking small profits and you have losses subsequently that exceed the profits, then you can go broke. It just kind of feels like an expression that traders use to reassure themselves that they're doing the right thing when they're snatching at a small profit. Not that there's anything wrong per se in taking a profit. If you're going to make money, you're going to have to take profits at some point. But the idea that it's never wrong, that you can't end up going broke if you're taking a tiny profit, isn't really something that adds up in the long run. Number 4, buy the rumour, sell the fact. Now, this was a phrase that would get trotted out quite regularly when I worked on a trading desk. Whenever you'd see the market behaving in an ostensibly unexpected manner when a piece of news had been reported to the market. And really what the phrase is about is the idea of aligning yourself with the way the market is moving in regards to expectation about a piece of news, and that often when the news comes out you'll see the market move in a slightly contrarian manner to that. For example, if we think about a non-farm payrolls report coming out, if there is an expectation that that will be a strong report, that may cause people to buy the market and push the market higher. When the report actually comes out, if it is strong, you may see people selling and taking their profits. So in the short term, you get a small dip in response to what is ostensibly a bullish report for the market. And of course, if it goes the other way, if it was a weak report, then you would see the market go down as well, because it wasn't what the market was expecting. So that there is, in that scenario, some kind of justification for the saying of buying the rumour and then selling the fact, taking a profit when the actual result comes out in the market. Number 3, never catch a falling knife. This warns against the dangers of trying to basically oppose market momentum. If you see a stock that is plunging in value, let's say it's released a profits warning and it's halved or quartered in value, there may be people who are tempted to buy that in the hopes of seeing a bounce back in the price. So in this scenario, that plunging stock is the falling knife. The aphorism is warning against the dangers of trying to catch that falling knife, because more likely than not you're going to get injured. Catching a knife is more likely than actually catching it safely, and the saying is trying to warn you that it's more likely that it's going to keep plunging further, that momentum is going to keep pushing it down in the direction it's going, rather than you safely negotiating the timing of getting the very bottom of the market. And you might want to wait and see for evidence of a recovery rather than trying to catch that falling knife and catch it at the bottom of its decline. Number 2, there are old traders and there are bold traders, but there are very few old, bold traders. Now this one's a bit of a rip-off of a flying expression referring to old and bold pilots, but nevertheless I think it's quite a useful little saying in terms of warning against the dangers of taking on too much risk. It's saying that yes, you can be bold and take on a large amount of risk and maybe get away with it in the short term, but the chances of you taking on too much risk, being very bold and remaining successful and therefore ending up as an old trader as well, is a very slim chance, and that's why there are very few bold traders. So kind of a useful one. Don't take on too much risk is what it's saying in essence. And number 1 is the trend is your friend. Just in my first year of working on a trading desk, I heard this phrase mentioned several times, and it is a reference, of course, to trend following. Now, while there are many different strategies that you can employ to make money out of the market, when a trend endures, it does tend to result in large price movements and therefore the potential for large profits if you are able to successfully stay with the trend, which is what the aphorism advises. Now, of course, psychologically, it can be very difficult to stay with a trend. And what actually is less well known is the ending of the phrase. And having said that, I heard it mentioned many times when I worked in the markets. I never once heard it in its complete state with the ending, because the whole phrase is the trend is your friend until the end when it bends. And timing when you get out of a trend is very difficult. If you get out too soon, then of course you potentially miss out on lots more profit. But to properly stay with the trend means staying with it until it breaks down, and that means giving back some of your profit. And that's what that last bit is referring to. It's your friend till the end when it bends and it goes against you and you give back some of your profit. Well, I hope you enjoyed this video running through what I think are the 5 most well-known trading adages. If you did enjoy it, please hit the thumbs up button and give us a like. Or if you've got any feedback or any suggestions for topics for us to cover in the future, why not send us a message in the comments section? We do read through every comment we receive. And as well as doing these kind of educational videos about trading in general, we also do videos with analysis of popular markets like the Dow Jones and gold and crude oil. And the best way to access all that video content is to click on the subscribe button and subscribe to Trading 212's YouTube channel. And we do upload new videos on a regular basis. If you click on the alarm bell icon, then you'll get a notification the next time we add a new video to YouTube and you won't miss out. But that's all for this time from me, Peter Martin, and Trading 212. See you next time.